Here, let's make sure. Good morning. Welcome to the ThetaWaveTrader. This is Breakfast Club, and this morning I'm going to be cutting the sound in and out because it's going to be a lot of background noise, and I don't want you guys to hear too much of that. So if I've got something to say, I'll just kind of hit the sound. Otherwise, you guys are going to hear a lot of loud noises and that in the background. So we're on the road, and sometimes we run into these kind of things, so that's no big deal. Let's have a look at the market as we see it this morning. Okay, let's have a look at what we got here. On the weekly or the daily, we're sitting at pretty much the midpoint of the range that we've been in for the last week or so. If you look from the high to the low of this, we're sitting just about 50%. We have relative equal lows where we have easy equal lows below us. So we're just over 50% of that range. So let's look at upside objective. I can see on the daily. I can see this kind of thing right here. Sorry, I'm going to be cutting in and out here. That's every once in a while, because I only got one screen while I'm here, so I'm going to be cutting in and out. It's not going to be the best quality of show this morning, but keep your eye on this level above us here. That's not working. And you look for this level down here. I guess we're looking for this daily box right here. That'll be a daily as well. I do like to look at these volume balances, even though you've been back through them. I still find them a draw on liquidity here. They're kind of important points to key off. So if we get back up on top of this one, look for a run back up into the premium box here in this range. And we don't really have anything, a discount box inside here, other than this fair value gap. There's a small imbalance right there. This imbalance, they're all kind of overlapping. This whole area is overlapping. So if you want to see some downside prices, we want to see price get through this volume imbalance below us here, and then start moving quickly through the rest of this range here, reaching for these equal lows. So you'd want to see that, or at least a run right now up into this premium box and see what kind of reaction we get off that on the hourly, or go to the 4 hour. And up in the 4 hour, we do have our a small premium here, and I think there's a tiny one up top there. Yes, there is. Way up here. There's a 4-hour preview here. We traded below it, came back to it, kept going lower. That's a 4-hour. So in order for me to get way up there, I'd have to get above here. We have to take out these equal highs at 552 and start moving higher. You guys can still hear me okay? Good. Just want to make sure I can see everybody in there. Joe Mack. Adi, good morning. I got my cell phone with you guys on one there, and I won't be able to watch the other channel. I'll see if I got an iPad here as well. So just let me know if the sound gets really kind of popping loud. So right now we're sitting in, I've got a bias. There is a slight, look at Hadi's 830 candle. It's an up candle. We've run out the lows here now, Hadi. If we run above the highs and then come back into your candle, we're looking for continuation to the upside, correct? So if that is an upside continuation, we'd be looking for these relative equal highs above us and that imbalance. And then I want to start seeing a reversal in here because we've worked this whole upside already. If you look at it from a hourly perspective, I think it is. Yeah. I think it's the hourly. You'll see there's like one, maybe not. I was going to say it's like a 3 drives pattern. I thought I saw a 3 drives pattern and there was that 4-hour. For 1, 2, 3, then a reversal. Like the 3 Indian pattern that Michael talked about. Was it over on this side? Stand by. There we go. 1, 2, 3, then the reversal. Now we're below this breaker. And we're re-engaging that breaker. So what I'd like to see is this has got to stay above, we're above here. So traded above there, traded back into it perfectly, went long. Now you're looking for this bull trap to give way and for us to keep pushing higher into this small level right here. And then we'll see how price acts off of this 4-hour BISI. And see if we can come back into, see how we've got a trade close above here now. I want to see this use this support to keep pushing higher. And we're already through the mean threshold of this candle already. So I'm kind of relying on the lower time frames to kind of guide me a little bit here. News at 10. Yeah, I think that's what I'm going to wait for. I'll wait for 10. That's a good idea, Hadi. It's very choppy here right now, so look at the hourly. Three drives, one higher, higher, and higher. So Asia took out yesterday's New York session, and then London took out Asia's session. So we'll see if New York takes out. I was looking for this earlier. I had a nice little run from up here, and I was trying to get down into here. This took me out, and then I re-engaged it here. And then as soon as it took this level, I started chickening out, thinking this would, I was kind of hoping this would give some support and go lower. It did, but I was chickened out long before that. It started getting too choppy for me. So I like things really clean. Good morning, Craig. I was looking at your oil this morning. And on the downside, I'm going to clear out all these things here. It's the plus one. Oh yes, we got to go here. I think it's here. There's something on the charts here you got to kind of take out in the back. Maybe it's canvas. Can't remember what it is now. I'm trying to get all that blue stuff off the background there. Sorry. Already bought crude and sold it. I want to buy it again. Well, you know, right here is on a 5 minute, you're up into the premium box here and the discount. So you look at this and say, is this a nice little trade for a long? You're sitting around 50% of the range already. So you're already at the premium. So in order for that to go higher, you'd have to see this break to the upside, and it hasn't. It's just wicked up into the highest up close candle there. Otherwise, the BISI is holding support. Now this SIBI is our downside objective. Is going from box to box. And now you want to see if this 6302 gives way. And if 6302 gives way, then you want to look at going lower. And then you have to wait for 6343 to give way to go higher. Ideally, you want to see a nice clean body break above this with a fair value gap and use this as a graded response, tap an old high, or depending on how high you get, look for a retap with this candle here. And this BISI. When the BISI is made up, so it's important you kind of remember this, when the BISI is made up with a candle that actually supports it, i.e. this last up close candle is a bullish candle here that creates this BISI. You have to use the bullish candle as well as the BISI as a potential place for it to return back into to go higher. If this was a SIBI, it'd be a different story with a BISI above it. So right now you're just looking for this to go lower. Overall, we're already retesting this old consolidation here. And now you want to see if this keeps pushing lower. So watch this 5 minute level. We got these two 5 minute levels there, Craig, for lower or higher. IM Disney is flat still. I have a watch here sign I put out here the other day. And it's just sitting right on that, bouncing around on it. So I've got nothing for you right there. That was just an important level I was looking at, and it seems to be holding, which is really the mean threshold of this candle right here. And that's holding price. So you want to see this thing continue to push these relative equal highs above you, and then this little gap right here. We can get up into that gap, that price imbalance, and see if you can get back up on top of this and start using that leverage to leverage higher. Otherwise, we're looking for, if that gives way, we're looking for down here. We're way into crude oil. I don't need these two of them. Problem with this computer is I've got lots of, see how we're retesting this level? And it's finding support there. So far not going any higher. I'm going to see if we can get through this mean threshold, this lowest down close candle here. If we can get through that, clear this BISI out, and then use this breaker as support to come lower. And then I'm looking for discount down here. So looking for this to run down, pop back up, use this breaker as support, and start running for this discount box down here. That would be my objectives for this morning. How's the sound, by the way? Is it kind of poppy? Can you guys hear me okay? Make sure I haven't turned off my sound. Good morning from Singapore. Vittorio, how you doing? How was Singapore? It's funny, we were talking about Singapore last night. We're having a conversation. Some friends of ours have been to Singapore, some new friends. We're playing crib with some people out here at the retirement community. We're here visiting Carla's family right now. And the heck was that? I met somebody who was from Singapore and said it was an amazing place. So looking for this continued push down into here. See if that mean threshold gets taken. This BISI gets taken on the downside. Not just a wick. I expect to see a wick at least run down here, at least to the rejection block, and then take the low. Let's see, I'll retest this area right here. 1983, wow. Good morning, Russell. Great place for business. Cool. That's a nice little retest there. Small little tiny area. If you hadn't seen it, it's right here. That retest. Let go lower. Thanks for hanging around last night there, Russell. Singapore is definitely on my bucket list. Yeah, it was a good time there last night, Russell. So thanks for sticking around and listening to me babble away about charts. We had some good trading there last night. Nobody's told me what the sound is like. You guys is it okay with the sound? I assume it's fine. Nobody's complained about it yet. And DAX this morning. We have a nice little So as you see, we've just broken above this breaker right here. There's a tap. You want to see this hold. If that doesn't hold, so that mean threshold right there was good. I want to see that leave from there. The fact that it's coming back into this level, we have lots of little bissies along the way here, so I guess you could still find those as support. And we're above this level. As a retest to go lower. And now I want to see this level provide support for price to go higher. So inside this breaker, you want to see this provide support. Sounds good. Thanks, Vittorio. So now we've taken that high. The thing you have to kind of keep your eye on is watching this Bissy and this breaker and Bissy. You want to see that pop back through here, find some support at this and start going higher. Otherwise, we've got our high taken, got a change in direction, trade back into it and come lower. So you got an overlap. One says it wants to go higher and we're already through the mean threshold of this candle. So I'm thinking we're going to push down deeper. If we can get back above that, then I'd start to use this as more support to go higher into. You got lots of little premium boxes along the way, little pay points. If you're bold enough just to hold it, this is a 1 minute chart. Let's go to a 5 minute chart here. See what you see. Yeah, 5 minute up here at 765, 767. Get a body above that. Let's go back to a 1 minute. So that's what you want to see. Closed above, give a little tap now, and away you go. Start looking for higher. This has been retested now. You want to see that go higher. Start reaching into this 771 level. If I want a real premium, I'm looking up here. So Ali, that's where I'm looking. If you're looking for more upside prices, and you don't want to see this get revisited down here again now. You want to just see this get used as support now to push higher, not waffle around in here. That's a lot of chop going on there. Yeah, everything's good. Just making sure my sound is still on. Sure makes a difference when you don't have multiple screens. So far, still looking good for 450. How long have you been with us now, Vittorio? I guess you've been with me for quite some time now. Looking for crude oil now to start using this as a retest point to roll over and go lower. Otherwise, look here at the 1 minute. You start to see the change in direction already. You start getting a market structure shift above this old high here, or even this candle. If you start seeing this used as support, then you got all these little traps along the way. So you want to see this bull trap, that one, and these two here. Let go and start pushing higher. Wait for this bull trap to let go, and you got a nice, decent market structure shift above here. And then you're running even higher still. got lots of liquidity sitting up here still. So you've got slight change of direction here, but you're inside this range, so be careful. This you'd want to get right here for a long, and then hold, and then pay yourself internal range liquidity. If you can get above that, then leave a piece on to run. $450.25 is $450 and $451. You might be on a micro chart. We had a good time last night. That was a good chat, Russell. Or I think we were just trading in the Asia session last night. Had some really nice turn points, some nice fine precision to find some entries. It was good exercise in patience last night too, and waiting for our optimum entries, which is what we're going to have to engage in here this morning, I think. Now if we take I'm going to put a little lipstick on this. Where's our 3 a.m. candle guy? Oh, that would be from there's 3 a.m. We'll make that the marky mark candle. A lot of lipstick on this morning. Midnight open. think this is the first one here. Let me just make sure I got this out of the way. Are we Wednesday today, are we not? I think it's Wednesday. All right. Looking how that it's working the 3 a.m. candle and the midnight open range. How the 6 a.m. candles getting worked. Just look at those key levels just getting worked there. Still looking for another run down below the 3 a.m. candle. All right. So if you have a downside objective and we're looking for our I'd be looking for here if we're using the Mark's 3 a.m. candle. If you're going from 3 a.m. to the 3 a.m. candle here, that would be the downside objective you'd be looking for. We'll wait for the 10 o'clock news. What are you guys up to? How's the day out there in Toronto? Hadi, what's the weather looking like out there? Is this frozen? Oh, looks like it's still going. Nobody's chatting this morning, hey? Still looking for this downside objective here. We'll see how we act off the bottom of the 455. Well, thanks, Netcap Nemo. I haven't, I just had people say the sound was good. This is just a headset. I thought it would be like crazy, not like noisy, a lot of echo and stuff. But, well, as long as you guys are okay with the sound, then I'm happy. Yeah, we've been in a solid 12 hours of chop. Close to 90 area. That's right, it's non-farm payroll week. I forgot all about that non-farm payroll. Ollie, good reminder. I'm in Carla's dad's place here in Carmen. He's in a retirement community here. So we're visiting Charlie first, and then we're heading over to visit up with all our friends from Africa that we met, and then I'm going to see my family for a bit. So we're here visiting. Crystal clear, like you're in the room. Well, that's really good to hear. 9:45 PMI. Yeah, this is one of those days where you don't really want to participate in the chop, especially before non-farm payroll. Non-farm payroll is going to make for a messy environment too. So it was clean there for a while, or relatively clean. I put a filter in there this time. I put 2 filters in there this morning to clean up the sound. I didn't know it would actually improve it that much, but I'm glad you guys like it anyway. I think I'll keep those filters. I'll actually try and change the filters at home as well. I have to remember the settings. I put them on. I added 2 filters to it. And if you guys like the quality, then that's good. I will adjust that when I get home. So we are down inside this BISI. We've run above it. We've come back inside it. We haven't run through it. We've hit this little discount civvy inside this small range here. And now we're getting a kickoff. So I want to see us break market structure to the upside. Otherwise, I'm looking at this little tiny level right here, from there to there as an area of support. And we're right near the top of it already at 486. So we can get through that right there. If we can pop through that, then you're looking to see if we can get through this mean threshold, which is pretty much right at the top of that little BISI anyway, that premium portion of the range. See how we've had this little breaker here that took out this low? We ran above it, but we have not come back and retested it. We ran straight through the next one, but we came back and retested the second one, then ran to the premium. It held, and look at this, just a quick snapback. This is why it's super choppy. You got to be careful. If you're staying on the horse there, it has to break that level, and it hasn't. And now it's continuing lower. That's a hell of a snapback. Is the family, everybody okay there, Adi? We got Daniel with us this morning. So we swept these lows again. Premium inside this small range. You hit the premium right there. Now reacted off of it again. There's no real discount down in here. So you're just looking at mean threshold for this last down close candle right here. We've bounced off that. Now we're ripping through everything here. Welcome to the Ginsu trading. You went to school. What's this? You went to school. Who needs school? You stay home with a D. Stay home with his dad. Learn to make all the money he needs to make. No, I'm kidding. School's a good thing. You got him in a private school or you residential school? Or I should say public school. My wife's a firm proponent of public schools. So there's the premium box again. We're running it. There's the rejection block. It's grade 3. That's okay. He's learning his ABCs. He's getting everything in public school. Okay, cool. He's going to know by the time he hits grade 5, grade 6, the kid will be making his college tuition. He'll be paying off his college tuition before he's 8 years old. He'll be learning so much about these markets. He'll be like, I pay for my college tuition. By the time I was 8, 10 years old, I had it in the bank already. Been trading with my dad. Nice. So we're above this level. We now got to see it close above here. And all you've got left is this little piece right here. Right there. I'm already through it. No close above here yet. And you're already through your premium. So, again, too choppy to play with. This is the 8:30 candle for Hadith's 8:30 is buried right inside the top of the midnight open range. We haven't retested it yet. So you'd want to see, now that we've taken out the lows, now you want to see the highs get taken out right in here. Then return back to the 8:30 candle for Hadith's long. Is that correct, Hadith? We're above this premium candle now. Let's see it come all the way back to this 8:30. And then you're looking for another push higher, and we're looking for this objective up here at 23,600-ish. We're going to see if we can hold this longer, Hadi. So there's the close above. We're back inside this candle. We came all the way back inside this cluster to whatever that last up close candle is. I think that's a down close candle there. So you're sitting right inside here. Oh, look at that rate. Still inside all of those up close candles. Again, I like to see this mean threshold not get taken. Nothing close below there. We've gapped up. And you're on a tear. We didn't get your 830 Hadi. Sorry, buddy. It was close. It would have been nice to see it come back and at least retest the first presentation for a rally gap and go higher. But we may still get it. How many people trust the idea of as soon as you see it trade above that level, as soon as it comes back and retests it, you're going to go long. Put your stop loss below one tick below the low of the little cluster of candles there. You'd be in this right now. Not that I'm encouraging you to be in this right now, especially when there's news at 10 o'clock and 9:45. Did you get much out of last night's trading there, Russell? Okay, now there's another one, but here you see how we've got a change in direction already. And we're going to get retest. This retest you want to see before you see this stuff. So right there, the retest, and then go higher. And this is not what you want to see. Otherwise, we've taken out old highs, change in direction. Unless that was hitting a specific objective you were looking for, like running out old highs or whatever, then you should have paid yourself. When you see this, see how it's already traded through this and right back into the imbalance. So there's the retest to go lower. Stay on the horse here. We're already through this objective. You traded through it. You're retesting, going lower. So now looking for this first presentation for a value gap and a D's 830. Ideally, I'd like to see this give us exactly what we've been looking for here, which is there's the retest of the first presentation. Now this one here brings you right back into the 830 candle for Hadi. We're going to go one long on there, Hadi. I'm going to take your trade setup. And I'm going to put it right below this guy here. One tick below this breaker. I agree. You're always going to look at a retest when the highs have been taken. You want to see, once the highs are taken, you see a retest, you want to see a higher high. Okay, that one's no good. That one didn't work. So we're through this breaker already. We ran out these highs. Now looking for this market structure shift. We'll see if we can get a first presentation for value gap retap. I tried your setup, Adi. Sorry, man. Do you have your stop loss in a different place for that? Like if this pans out now, did I have it in the wrong place? Where would you have put your stop loss? Ran through the 9:30 and the midnight first. So I got the midnight right here. The first one here. You must be on a different one than me, Ollie. There's the retest to the first fair value gap and the 9:30. Where's your first midnight fair value gap, Ollie? You must be up in here somewhere. Retest again. Nice re-entry right there. So the highs have been cleared out again. Let's see these lows get taken out now. Right there, you want to see that stop. Oh yeah, okay. So for continuation and reversal, so this is an example of what I'm just talking about. So last night we were talking about what's the difference between continuation and reversal. When you're expecting a reverse or a change in direction, we're looking for a low, previous low to get taken. Okay, so previous low to get taken, looking for a SIBI to form, and then you're looking for the SIBI to get broken to the upside, right? And then that combined with a market structure shift, we're looking for a continuation. That's the reversal or the change in direction. And then the reversal is confirmed when you take out market structure and see a continuation to the upside. Now, an extension would be box to box. And when the premium box is taken right here on a close, right there, and comes back and retaps it, I'm expecting an extension of this range. And then I'm looking for or hunting the next premium level. Next premium level. And up there is a little tiny premium, right? And if you run through all of that and you take out the old high and come back and retest this level, but you drive through it on the downside, come back and retest it below, you're looking for another change in direction from here. And then you look for your BISI on this side to confirm that. So whenever you're looking for the box-to-box trading, the box-to-box is internal range liquidity hunt. And when the premium or discount box is taken to the downside, you're expecting range extension. And if it trades back through it, then the range extension is not happening, and we're going to continue going higher. So in this example here, see how we see a body trade through it? I'm expecting to see range extension. I'm expecting to see this go lower, right? So it trades back up into it, slightly trades lower, then trades through it. So you go, I'm not expecting a range extension. So it's not 100%, but that's a very high percentage of the time it will continue to do that. So it traded through, so we're on the wrong side of it. Get back in sync. Now you're pulling this fib tool from here, and you're saying, I'm expecting at least 50% of this range to get hit or more, 62%. So if you lose this for a tap on the downside and go lower, that runs back through it, then expect a 50% or more of that range to get hit. For example, I take from here to here. Oops. So here's where the range extension fails right there. It comes back, and then you hit 50% of the range, 62% of the range. Optimum trade entry reversal, we have a change in direction, and then we look for this level to get broken on the downside again. It does. We get actual range extension on that this time. You come back, tap it, new range extension. Then you want to say, do we continue to extend the range by finding support in that level? What you do, come back, found support, range extension again. Then we're looking for this level to break to the upside. And know, okay, we're on the wrong side of it now. We're done our little range extension stuff. Now we're looking for your SIBIs and that down here. Once you've taken out new lows, you're always constantly hunting for a new SIBI to run back up to here and then get through that. Once you get through that, it's also a premium box. You get through that, find support at it. We're looking for another new range extension. Same thing here. There's a little BISI right here. You traded through it. Now we're looking for range extension. It came back into it. Range extension. Pay yourself above the highs, and then you wait for the reversal. The reversal happens. You trade back into it. Now you're going short again from there. So change in direction, short. So now you're done. You've taken out your highs. You're looking for this. You're looking for that perfect entry there for continuation back down into this range here. And then when we take out the discount SIBI, which would be this immediate rebalance right here on the downside, we're expecting range extension again. So you've taken that out on the downside. You come back into it right here. We got a wick. We want to see a body stay below here now. And then you're looking for this range to extend lower. If we close back up above it, you're looking for another run back inside here to this SIBI or this little imbalance right here. And you got to overlap. Does that make sense? That's how the simple way for how I look for range extension. Always look for the premium box to get broken to the upside. and then get retapped before you take out the high. If you take out the high, then first thing you're looking for is this and a retest of that old high to keep going higher. Now, some people say, I don't like it as soon as it takes out a high. No, I love those. If they take out an old high and you get a fair value gap forming there, you have a graded response. And you hear me talk about graded responses all the time, provided you have an upside, a higher time frame upside objective that you're reaching for. That's a perfectly valid idea. And if it runs back through it, you go, nope, dump that idea. I'm on the wrong side of it. The horse is changing direction. Now you're going to get short again. But you've got to be aware of this. And so I have no problem with a high getting taken and going, oh no, this could definitely extend even higher. I want that to hold. If it doesn't hold, then I'm expecting price to reverse. That's exactly how I look at it. And if you don't, that's fine by you, fine by me as well. You've got what works for you guys, but that's my idea of a range extension and continuation. And you'll see that multiple times. That example I gave you at my trade notes the other day, many examples of exactly what I just showed you there. This is obviously very choppy, but when it's clean, you'll see it happening all the time. But you got to be prepared to follow the rule, and you got to be really tight on your rules around an old high taken. You do not, that's why you'll see me say, I do not want to see 50% of that candle get taken. When I say, I see this coming back down, this, you want to see a nice graded response off of the fair value gap. You'll always hear me say, I want to see a fair value gap form above this old high. Sweet. Now I want to see a graded response. A plus setup as it just takes off and leaves. Right, hits here, opens and leaves. Or the A level is institutional order flow entry drill, continuation. If it doesn't, then I look for consequent encroachment. That's the B level response. Go higher. C level response is 75% of that. D level response is a full fill of that BISI. And I'm looking to see where this old high lines up. Sometimes it lines up perfectly in the middle of the consequent encroachment of that BISI, that you can just see it tap it and leave. And then the D level is when you say, I see it fill. If it doesn't, it fails. You get an F. It fails. I come back for a retest. Now I'm getting back in sync with it. My extension longer has already been done. And like Ali says, he's not crazy about trading above an old high when old highs are taken. Do you have a higher time frame objective still to go higher? If you don't, then look for the reversal. And the reversal's right there to perfection. You get the change in direction. And see how that little level down here, we traded through it. We extended this little range, but we didn't take out the larger one. It went all the way back through it, and we ran all the way back up into that first presentation again. Super choppy. So I have to wait for it to break through 466. It's the only thing I can see in that choppy mess there, other than this guy here. It's super choppy. So not a great examples right now of range extension news on the non-farm payroll week. Hopefully that makes sense, Russell. I agree, Hadi. No rush, man. Now we'll see. Do you guys have the patience to leave this alone now until Friday, when non-farm payroll is over? Or are you still chomping at the bit to get in on a trade in high resistance? Not a lot of clean objectives on a higher time frame to reach for, other than the lows and that 3 a.m. downside objective at 382. This is where you gotta be super tight with your convictions, Russell. See the charts, study the charts. They gotta be clean, and if they're not clean, don't engage it, because this will just create more frustration. Because you'll see, I saw that one little piece right there, and it didn't. Inside all this, you should be looking at this, going, not gonna touch it. Just too noisy. There's a ton of liquidity sitting down in here too. Below those lows, but all of this here. Done for the day. Not for me. Good for you, Ollie. That's a smart guy. That's a smart guy. Good for you, man. Go close the charts. In that case, exactly, Russell. I'm going to stick around in here, but I'm not going to take any more trades. I'll try and call for clarity. If I see a clean entry, I'll let you know, but otherwise, this isn't worth your time, you guys. You should all be closing your charts right now. I need it to be much easier than this, or I have no chance. Yeah. I love the way Ollie thinks, man. He's got wisdom in his trading. Good for you, man. This is not ideal trading at all. As soon as you see all this chop, and we're sitting inside the first midnight open range, and look at how much chop you're sitting here just in the open range midnight extension. It's just nuts. And 10 o'clock is 3 minutes away, so we could see yet another run on highs with an upside objective at 23,600 and a downside objective of 23,382 or more. You see, notice how clean it was last night, Russell, compared to this morning, and how much price was hitting like key levels and then reacting off them nice and clean. And yet this morning you look at this and you think this is just way too choppy to play in, right? And sometimes you just got to set your charts down for the rest of the week and just go enjoy family. Just enjoy your time. And don't try to force yourself, because if you take hits and you try to revenge trade this and you start to get all frustrated and I got to try and get that money back, I got to get that money back, and you just continually get beat up in the markets here, you go into the weekend having had a major beatdown. For what? Because the psychology is that you're just pushing yourself in markets that are designed to beat you up. They're designed to take your money. So you got to be super careful in here. Just be like Ollie. Close the charts, walk away. Last night was tons of fun. This morning, not so much. Not so much. See, this is stuff we were doing last night. Premium, through the breaker, discount. Nice. Looking for range extension. Trades below it, comes back into order block. If you don't get the discount, and it just keeps trading. Look for the order block. If you can get the order block, take the order block and go lower. That's when you know it's got direction. That's the intentions we're looking for. It was really nice little couple of pops there last night. You're a wise man there, Vittorio. The NFP protocol is in place. And the problem is if you win this, if you win some trades in here, all it's going to do is reinforce a gambler's mentality, because to trade in this and win is not skill. It really isn't. It's just luck. You're just playing with, you must have just go to a casino right now and put it on black or red. There's nothing clean about this at all. It does reinforce bad habits, especially if you get a dopamine hit. Let's say you got this and you're walking around and you actually believe that you did it with a set of skills. Like, oh yeah, I nailed it, man. I saw that first presentation get hit. I was all over that and I was just aiming for the next low and I got it. It's like, man, I know what I'm doing. And you're just encouraging yourself. You're just telling your brain, keep going in these high resistance environments. I can do all this stuff. I can trade high resistance. Who cares? You're not doing yourself any favors. So again, I'm still looking for this downside here. First objective is 391. Then looking for that 382. There's your discount or your downside taken now. Again, are you itching to hit that sell button? Are you itching to say, yeah, I knew it was going to go there. Yeah, we saw it going there. That is not something you want to wait for it to get there. If you're taking this trade here, you should have that sucker right in a risk-free trade. If you're headed down here, risk-free, and all this chop, you're just sitting there going, I'm just going to leave it risk-free and see if it gets there. And that is a lot of pain to endure. Next low, 431, or rejection block, 435. There's the 830 from the other day. See how, Russell, as we break through these old lows, see how the body closes below them, we come back and retest them. That's what you're aiming for if you don't get an opportunity to get in on this guy again. Like if you don't see a body trade below that, come back and retest it. And it breaks the lows, then you look for the lows to get retested. The order block or the actual low itself. So this is when we were talking last night about it's dealer's choice, it's trader's choice. Either take that wick, 50% of the wick, the low or the close, half that order block, or if you're reaching way back in the air for this go, no go line, then dealer's choice, man. Trader's choice. You could do a scaled in response little, you put one on until you say, I've got my full 5 or full 4 or whatever it is. My stop loss will sit just above here because if I'm on the wrong side of it, I want to minimize big losses. So again, dealer's choice. Trend line? Kevin, who's talking trend lines? Still wanted to be in the group. Yeah, every once in a while I'll go in through the on the channel there, and I'll just delete people who haven't been there for 3 months, 2 or 3 months. I think it's like a 2 or 3 month limit I have on there. I just start deleting folks that are just not actively participating in the community, so, or don't come in and watch or help out or whatever. Then I just go, okay, they're obviously not interested. If they are interested, they know where to find us. There's a link. You go back to the link. And I saw you still in there, Vittorio. Did you take this run off the low here, Hadi? Did you take that short right here? That's the only relatively clean setup I can see is right here. That little tap, and then go lower. That's the one you took, yeah. Good for you. It's pretty ballsy considering all that crap above you. Nice little pop. So stop loss was where? So where's, just so we're clear, if you don't mind, we're using yours as an example here, Hadi. If Hadi takes this trade here, which is a logical place to take it, trade it below, come back, retest either the lows or high again, dealer's choice, trader's choice. He takes this return and goes short. We know what his downside objectives is. He's looking for pay himself at rejection block, pay himself at the bottom of the daily, and then stop loss is moving down quite quickly. But where do you initially put your stop loss at D? Because if you're aiming for small little objectives like this, I would imagine you're not going to have your stop loss sitting way up here and risking twice the loss for just a small gain. So where's your stop loss sitting right now? Yeah, it's a very, very crazy price action right now. Unless you know specifically what it is you're looking for and you get it, and very small leverage, very small stop loss, it's not a market to play in. Yeah, whereabouts was your stop loss sitting? Just so I got an idea of what it was where you found your support. Do you have a fail safe in there? Or did you just trust that I'm expecting that to go lower? I'm still looking for this downside objective right here at 391 and see if we can get to 382. Above 1002. Above 1002. 1002. Right here. So you sit just above the consolidation, just above here. So it's literally the next candle behind him. He's sitting on top of it. Fair enough. So far, this SIBI is holding. If this fails, then I'm looking for a run back into 50% of this range. So wait and see if it fails there. If it doesn't, it continues to roll over. Look for this discount box down here on the hourly. That's the downside box I'm looking for. Again, it's not clean, so don't be tempted to take the trade unless you're absolutely certain that this is your entry. This is really good exercise in patience for me this morning. I see lots of entries, but super choppy, man. Not worth the time or the effort. Wait for something clean. So next week, non-farm payroll is over. Everybody's back to school. At least everywhere else. I think in Alberta, they're all going on strike. But people are back to school. Businesses are kicking off. Traders are back to work. They're paying for their little trip to the Hamptons in the summertime. And everybody's working on the last quarter of the month or last quarter of the year. So now we're above that level. We're looking for 50% of this range right here. There's 50% already. It's hit. There's 62. So looking for a 70% off-one trade entry. That's back to that little level we talked about over here. We'll see if we get a reaction off of that. There's 70%. See it tap it and see a kind of reaction. I love seeing that. Doesn't matter if it drives through it. I just like to see it hit it and get a reaction off of it. And we're testing it again. So now we're thinking, and now it's drilling into it. It's like that stubborn bull just smashing into the wall, trying to break through it. And if we get through the other side of that, find some support. I don't see anything else up here except for here. And it's so choppy right now, not worth taking. 484, 488. So far that's holding. It's holding. I'll see if we can get back through this level. Again, too much chop. 70% optimum trade entry reversal lines up perfectly with the level we were talking about earlier. We closed through it here. You traded back into it here. Went lower, range extension. There's that range extension again, Russell. That little level we're looking at right here, this immediate rebalance. Broke into the downside, then went to the upside. Then when it broke down again through the downside, back into it, then it did a full range extension. Again, not a clean entry, but another example of it here. We're back into it again, one more time, and now we're digging through this level. So now we're looking for a range extension. So if we close below here, you're looking for a retest of this level and range extension. And you've already taken old lows already. So if they want this thing to continue pushing for a higher time frame objective, I want to see this level right here give way, which it just did. Now you want to see it come back and retap it. If it doesn't and continues to drive through and takes out this candle, then it's back to that, what we talked about before, dealer's choice. I want to see the low, half the wick, candle, half the candle, all the way back into that imbalance again. If we can hold off taking that low and come back and test that level, go short. Then you're looking for, pay yourself there. Okay, so we're already broke through that low. You didn't get a chance to retest. Range has been extended already. We traded through that. So you're expecting range extension. There's your range extension. So now, when that closes in the next 13 seconds, we've got a wick below the low. And now you start to look there, right there. See, it's the same kind of thing we talked about here. The same thing in reverse right here. We've got a low, take a look at that, tap it, dealer's choice. Are you going to take that for a continuation further? You're looking at the lowest part you can go, discount, discount, to try and get another little piece of discount. So again, if your strategy is such that you're like, I'm not touching that. I want at least a premium here, because you're back into, does it create a fair value gap here? So there's half the wick is done. Next one is the body. That one's done. If you get through here and take this bull trap out on the upside, you're on the wrong side of it. And that little level right there. So there's a mean threshold. 830, old 830 candle. And as soon as it takes that low, you pay yourself. Bingo, pay yourself. Move to break even. Risk-free trade. What had he had right there? So 1, 2, 3, 4 levels. Well, I didn't quite get the fourth level, but you got the first 3. Then you extended the range, pay yourself. And I don't care that it's only one little tick below it, it's extended the range. You pay yourself. Move to break even and wait. It's a choppy environment, man. Pay yourself whenever you can. Now, I'm not saying that's a great trade, but it's another example of exactly what we saw up here, exactly what we saw right here, repeating itself. And right there, you didn't get the delicious little dive down. You get a little pop down. That's all you got. So if we come back one more time and still revisit this area, what I used to call buffering, comes back and runs lower, all the money you made from here, here, or here to go lower and take that low out is going to pay and offset any loss that you're going to take if this closes above here and goes higher. That's why I called it buffering. So again, you can load in here, here, or here, all the way up to here. And if it takes out that low, you pay yourself again. So now you've taken from here to here, here to here. And all the money you're accumulating on this little tap, tap, tap over key level, you're going to buffer any loss that you're going to take if that suddenly rips through you. Again, stop loss is going to sit just above the mean threshold of that candle, or just above, a couple of ticks above this SIB, because that just tells you on the wrong side, and it will. I've got a low taken, we've got a change in direction, there's a little tiny imbalance right here. We start eating through those and start digging into this breaker here, then you're on the wrong side of it. There's your line in the sand at 446. Morning, Derek. Concerned about the price action? Sheesh kabibble, my friend. Absolutely, it's crap. Not a place to play in, man. So there's the retest of that level. That's your line in the sand right there. You don't want to see it go higher than that, because now you've got one that wants the hold price to go lower, and this one says, I want to take it higher. I want to find support here and this mean threshold. If you're just above that mean threshold and it takes you out, then whatever you buffered down here as a loss should get you back pretty much break even. We do not want to see a body get above here. I don't even like seeing wicks get up there. Now you got a body above this change in direction. This is failing. And this, if we get a close above here, wait for your bull trap to fail. So you want to see market structure shift for a true change in direction. And you're aiming for back up here again. Or this one here first. Smaller range. Then you start looking for the next one, which is up there. Still no body closed above here yet. We'll wait for the next 15 seconds and see. Exactly, Russell. There, that one's closed above there now. So now you're on the wrong side of this. So whatever you got in profits here, you're out there, or unless you just tried entering in there as the last ditch effort. If it comes back and taps you out right there, take your break even. That's why these are like the ideal trade places right here. If you hit it and it trades through you and you go, I'm on the wrong side of this, the moment it trades back to you, you break even, you pay for the cost of the trade, move to the sidelines and wait for a market structure shift. That's why that's the most ideal place for a short. Because if you're wrong, it'll trade through it, come back, tap it, say, now you're on the wrong side, break even, get out and wait. That's why you understand failsafe. And if it rolls back through here, that's another one of those, welcome to this choppy, crappy environment. Then you want to see that one get taken and this one here get taken all the way down to 434 on the downside. Come back in, find support at that, push lower. If you're given all this as wiggle room in terms of this level here, finding support, your stop loss is sitting up here. Just know you're getting squeezed. If that mean threshold doesn't get taken, you're still good. Very small environment. 1, 2, 3. So for your bears, you got to start pushing down. You don't want to see it get any higher than 459, which is that mean threshold of the last up close candle. If it closes above that, expect to see it get tapped and then look for this little range right here to extend. This out of the way. Oh, Derek's got you booked in, Russell, for a tea time. You better turn up, man. Or is it Derek's tea time? Is it 2 o'clock? You mean threshold is busted through? You saw it early that we traded through it. We came back into it for a long. Take this guy out here, mean threshold. This is good. Pay yourself a projection block. Pay yourself at an old high. Wait for a body to get above here. Bull trap fails. Doesn't support going lower. And now we're running back up into the next objective up here at 485. Yeah, this is not a place to kind of practice in right now, Craig. Indices are, this is what we call the non-farm payroll protocol. Don't touch it. It's non-farm payroll week. After Tuesday, you should have all your trades off, or at least Wednesday morning. All your trades should be off, and you wait on the sidelines for non-farm payroll to be over, and then look for the possibility of the market settling down a bit. You can wait for 15 minutes to half hour after non-farm payroll, and you can see some nice, clean, beautiful setups. This is macro time now. Macro time. That's at macro. Well, it's not macro yet. It's 2025. Notice we did not get a chance to retest this. We had a body close above it. And now we're looking for this 4393 level. That's all done. Next link is your first presentation for value gap again over here. If we get a body above here, look for support on this. And wait for it to get through here. There's so many little bull traps in here. This one hasn't been validated or come back and retested yet. This big sucker right here just got closed above. So you want to see how the mean threshold's already closing through here. I'm expecting to see this guy get revisited. Is this easier on a 15-second chart for the pros? I suppose it's kind of a contradiction in terms. There's the retest of that mean threshold's gone, retest. I guess it's contradiction in terms. If you're a pro, you wouldn't be playing in this. Just move it to the sidelines. They'd be like, low-hanging fruit. Right now you're bashing around the trees trying to grab something out. You're trying to pick pieces. And if you're really good and you see some clean entries, like I can still see some entries here, but again, I'm not touching this. So you do leave some bread on the table. Old high taken, change in direction. We're starting to date. You should have just seen that tap and then leave. It's not. It's digging into the body. If it gets into that halfway through this wick, look for a retest on this down here and down here. It's got to get out of here. All you get is the mean threshold, that's all. There it goes. To go first level, looking for first is 565, 522. Yeah, be careful though, you're rushing a bit too far ahead there. Russell, keep in mind, last up close candles, mean threshold is always important. You got this one here, you got a little tiny one here, you got a tiny one here with this. You have to keep those in mind as well. And there's so much chop in here. So there's the retest, that's holding. We get through the mean threshold of this candle. We validated it from below. So there's the mean threshold. If it bounces here and starts to come back down, you start to go, that's not what you want to see. You want to see this drive through that mean threshold on a close and then run through it and then go higher. Does that make sense? So I like to see this come back, retap this, keep pushing higher. You get through this premium again, that's good. Come back, give it a retap. Now you want to see that push through this mean threshold here. So data point hit, traded above it, came back, we tapped it. Now you want to see acceleration through this next data point and clean these highs out. So in essence, you're looking for a range extension to the mean threshold of this candle. If it holds and reverses again, and you see this little SIBI here and BISI get taken out to the downside, look for this little swing, and you're back to that guy again. So keep pushing higher. Just narrating, really. Okay. Just practice staying on the horse, you guys. That's all you got to do. And if you're missing your data points or you overextend and you say, okay, I'm looking up here, don't forget this one. If it reverses on you, say, what data point did I miss? Hold highs. Next one's here, and that little 498 to 502. Highs taken, pay yourself. If that's your entry right there, pay yourself there. Come back, retap, keep climbing higher. We're through this level now, pay yourself. Look for the rejection block, pay yourself. Right at rejection there. Stop loss should be in profit. And now you're just sitting back and collect some cash. It's risk free. This is a little, see, it's starting to clean up a little bit here now. And you're up at a premium portion of this range. And we're wicked through this mean threshold as well. So I want to see a body close up above this first presentation, use it as support, which is also the mean threshold of that candle. Then I want to reach for the highs, and I'm going to look for that 522 that Russell was looking for. Did you get yourself paid there, Russell, at 509? Nazir, good morning. You missed it by one tick. Well, you're going to get it. Don't worry. Here she comes now. She's going to drive up there for you. Confirmation is you want to see this stay above here now. If you're in long right there and your mean threshold, just make sure you're above or just below your mean threshold here. So it's still in profit. You've paid yourself once and you're looking for 509. Then look for this up here at 520 something. See, we're above that first presentation again. Give it a tap and look for it to go higher. And we're revisiting this. Mean threshold again. I'm all right with that. Oh, that's good, all the way down to the mean threshold, this candle. And you don't want to see it. You want to see, I want to see that hold and keep pushing higher. I don't want to see it come back and start digging into here again. There's no, unless you really stretch this out, there might be an imbalance in here somewhere after taking little highs. That's why we pay yourself at rejection blocks. 509, what was this right here? 509. So if that's the spread of 0.5, your 509 would, even though we hit 509 and 509, you wouldn't have been taken out because you're like half a tick. Not in this environment, Nazir. 1 minute's great for nipping little pieces of price action out, but I wouldn't trade in this environment, even though I'm giving you some nice clean, or at least nice hits. It's not super clean. I think this is more of a moral victory you have to have over your desire to trade. is staying out of a market like this, just training yourself to stay out of this market, because it's non-farm payroll week. There's perils and pitfalls ahead of you, and all you're going to do is reward trading in an environment that you shouldn't be in. That's just my advice there, Nazir. If you want to keep taking your trades, keep going for it. And also, a lot of says Heikiashi candles is okay to use for quick scalps. Never use a Heikiashi. Never use it. It's not ICT stuff. It's an indicator. This is just pure chart analysis. And this will be way more accurate, I promise you, than any Heikiashi will ever give you. I will give you more precision in here, and that's not arrogance, that's just using ICT's principles to give you way more accurate entries and exits. That's just my opinion. You got that? You got your net 509? Excellent. Now the next level you're looking for is 521. 521 to 530. There's the 6 a.m. candle. Did we just say 521? There's 521. Looking for 530. Pay yourself. Hold high, pay yourself. Into a range of liquidity. Don't be patting your back, Russell. You're still in an environment that's not super clean. Yes, there were some nice entries there, but we've given you lots of entries here, but there's just be careful, man. Don't reward too much of being in this kind of crap environment. Next one is 2350, 23,530. And then we're looking for what next? Range extension. So if we close above 530 on a close, we're looking for this premium box now. This premium box to close. There's 530 right there. Done. Tested. Box to box. This is my box to box trades. Again, not touching it, but there it is. Box to box. And you had a level 1. You didn't get a level 2, level 3 entry. You just got level 1 entry to a level 1, 2, 3 exit. If that reverses and takes that out, you're going to be so glad you paid yourself at the premium. The Nifty 50? Nazir? Oh, let me know, man. If you want me to look at it, I can look at it for you. I look at DAX, I look at the German one for my friends Hans and Ali. I'll look at the Nifty 50 for you if you want. Is that what you want me to do? You want me to give you a little looky-loo on Nifty 50, or is there something else you want me to look at, Nazir? Russell, I had more clarity there and during the open than during the, yeah. Joe Mac, hi guys, I'm out. I took that run. Nice sweep for me. Have a nice day. All right, Joe. Have a great day, man. Now what we want to look for is a trade below this low. See how that premium box, its consequent encroachment is holding, even though you've had 3 levels of movement out of it. This discount, or sorry, this next level. So if we roll over and start to come lower, we want to see this get taken to the downside. It just comes back and fills it right now. So if we pop back through here, find support, look for range extension, and realize there's still arrays above you that are still looking to be supported. So if you just get a wick up there, you say, I thought you said it was going to go for the highs. It's going for PD array. So half this wick, half the last up close wick, then the highs. But otherwise, we're still looking for this and this to see if they support price to come lower. Agree fully with the concepts and ICT's concepts on the market. Well, gents, honey, super suppers are here. Bees can now keep everything they gather from here on through the fall. Fingers crossed they will make it through the winter. Yeah, let's hope they do, man. We're already eating through this level, so looking for this to go lower up the premium box. Look for overall run all the way back through the discount box and see if we can get range extension. So we've got this run back up again on the higher time frame. Look at all these attempts to get higher. We've had a wick through the higher. It won't let you go any higher than that. Reverses, change in direction. So now we're getting into a bearish stance. So those of you who wanted to push higher, it ain't higher until we get through here. So now you've got change in direction. Look for market structure shift here. Through this candle's mean threshold, close, come back, find support at it inside the first presentation fair value gap, and look for another run lower. Go bees, go. Thanks, Steve. See you later. All right, man, take care. I'm almost out of here too. I'm gonna spend some time with family, so maybe cutting this a little short this morning. Look for that order block, bearish order block there, this little breaker. Takes out this high, these highs. Some people might say propulsion candle, but it's a swing here, so I'll look at that as a breaker. Takes out these highs out here. 1, 2. Change in direction. Mean threshold is now being closed through. That's also a BISI that's been closed below. Find support at it right there. And then you want to see that come lower from there. Which one do you prefer, sir, for low capital in India? So which one do you want me to do there, Nazir? Is it you want me to look for at the Nifty 50? Is that the one they use in India? I'm going to go on there. You're not giving me a straight answer whether or not it's Nifty 50 or not. I'm assuming it is. I don't trade India. So let's look at, we'll go right here and we'll put in Nifty 50. Invalid. Here we go. So the same principles apply there. Bank Nifty. Is that the sign? Is this the one you're looking for there, Nazir? Is that the one right there? If that's the one, I'm going to quickly give you a quick rundown on why that one's the ideal. So right here, so we'll start over here, or we could even start here. After you've taken some lows, we see this change in direction right here. The body trades above, you can ignore that one, I suppose. You can see I return into this little imbalance right here. Look for this high to get taken. Always look to the candle to the left. Look for the bull candle to the left. As soon as it gets closed above, comes back, taps it right there for a perfect entry for a long. Look for your premium box right here. And then you look for range extension if we can close above it. Well, you opened above it, then extended the range. Then we pulled back in, and you want to see if we get below this level. It does. It opens below it, comes back, trades back inside it, and then goes lower. And actually takes out this low. You'd be aiming for here. It would have literally gapped out here the next day. So you would have made money if you're aiming for box to box trade here. Even in here, turn in direction, trade back into it, box to box. You would have been here saying, oh, tomorrow I'm expecting to see it run here, and it goes kaboom, opens here. If that's where your take profit would have been, you would have actually had your profit taken down here because it's the opening first price that is pinned to the market. It's down here, so you would have been paid down there, minus whatever the spread was. Anyway, so we start to look for a change in direction. So now you've taken this low, change in direction right here. It gaps all the way through it, and then you say, well, if it takes this candle out to the left, always look for the next bullish candle to the left, closed above it, you say, great, now if it comes back and retests it right there, perfect entry, you go long, take out the highs. Gaps up above it. If it comes back and taps it, look for a continuation to the upside. It doesn't. So we look for this BISI over here to get taken to the upside. It does. Do we come back and retest it? Yes, we do. And we retest the old high, and we go higher. You have a change in direction here. Body closes below it right here. You come back, tap it here, come lower. Looking for this discount, SIBI. You trade through it. Now you want to say, I want to see a range extension. I want to see it trade back into it. It does. Trades below, trades back into it. I want to see range extension. Boof. Range extension. See, even on this Nifty 50, you see the same thing. Internal range liquidity hunt. So if you were digging down in here, and this is a daily chart, I'm sure on an hourly chart, you'd find it your entry here somewhere. Mean threshold of this candle. Trades back into it here, goes higher. Look for your premium box to get taken. It literally gaps up through it. You open above, come back in, you tap it right there. And then you went higher inside that range. Breaker. You hit the breaker. Reverse, there's a change in direction. You trade below it, wait for this down close candle to get taken to the downside. It does. You can't trade back into it. Look in here to see if that candle would have got hit on the hourly chart for a run back into last down close candle. Again, it's mean threshold. You want to see the mean threshold get closed below? It does. Then runs back through it and takes out the high. Now you're back into, does this hold price? It holds price, runs back up, and look for this premium box and this breaker. This one's buried inside the breaker. You're right into the consequent encroachment or the mean threshold of that candle. You've come all the way back down into here. I want to see this hold price now and come back up into this little tiny box above you. If you close below 572 on a close, look for this guy down here. And if you close below that, look for a run below these equal lows and back into this imbalance down here. Otherwise, you're right inside that whole range. You've started way up in that premium portion, which is probably 70% already. There's a lot of gapping going on inside this. There's 70%, so you're right up at 75% inside the mean threshold of the breaker. Not a breaker, sorry. It's just a mitigation block. We haven't taken out that low yet. You've come all the way back into I want to see that push down just a little bit more. Yeah, you've already hit the edge of it here. So if it can push down into here now, if you can get into here, look for the consequent encroachment or the top of this candle here at 654. If that bounces off of 654, look for a run back up into this premium area right here at 048. I'll put them on there as areas of interest for me. Watch here. I'll put the sticks in here for you. Those are your two areas of interest. If you trade through that or neither that, you're looking for range extension and you're looking for a like array. So you've got imbalance or volume imbalance here and a volume imbalance there. Discount premium. That's a daily chart. Indian market's not the same as US markets, brother. It's not the same, but the algorithm is the same. Nazir, if you don't believe that, you're wasting your time here with us. If you think that your market, even though, yes, it is totally different, same as German market's different from India, different from America, but if it's algorithmic and it's written, and trust me, it is, well, you don't have to trust me, but stick around. I'll do the Nifty 50 for the next few weeks, and I'll show you that it's algorithmically driven. It is not Heikin-Ashi. It's none of those other indicators and crap that people use. They're not trend lines. None of that stuff. And I know it sounds arrogant, but stick around in here, man. I'll show you the same thing on your Nifty 50. They're not the same markets, but it's algorithmically driven. If you understand the markets are driven by an algorithm, you won't care what market you're in, you'll still trade it. And exactly what I show you in here is exactly the same in your market. If you don't believe it, don't waste your time. Thank you for turning up. Thank you for coming. find yourself somebody who buys into Heikin-Ashi stuff and all that other stuff, because you won't get any joy here from us. And I'm saying that not to be rude. I'm just saying that out of respect for the hard work that you're putting in. I'm sure you're putting in some hard work there, but I guarantee you, your market is driven by the same algorithm that ours is. Doesn't matter that your economy and all that other stuff is different. It's algorithmically driven. And if you stick around long enough, Nazir, I'll prove it to you. And I'll pop into your market every day. If you're here, let me know you're here. It says Indian markets are not the same as US markets, brother. It's not clear. It's have expiry date for options. Actually, we have hours to trade a day in that 6-hour market. Show me 4 hours sideways. I'll show you. We'll go down here. I'm going to show you something. You read that message first, sir. Let me show you here. Nazir. Doesn't matter. We'll do a 1-hour chart. You have a change in direction. Wait for market structure break. Breaks above it. Do you get a chance to come back inside it? Pull your fib tool on the inside of this chart right here. I'll show you on a 1-hour chart. Put this in a little tighter so you can see it. Wait for market structure shift. It's right here. You were traced back into the order block we talked about. There's your swing. You've taken out an old low. You swing. You look for a body to close above this level. It literally opens above it, comes back, taps it. So if you had the savvy to see that, you would have caught that right there, and you're aiming for your first objective. You hit it, great. Then you start looking for 50% of this range. There's 50% of the range. And then it rolls over, comes back, and hits the breaker that finally takes out that low. Right there. You trade back into it. And the same thing I tell you guys is look for no more than 50% of that comes back to 50, just under 50% of it. There's the full 50 right there. So if it taps the old high, you catch that for a long. You've got to get this one and this one to get traded through above. Okay. So you trade through. This is an overlap. You've got a BISI and a SIBI. Not a BISI. You have a price imbalance along with this little. It's just all price imbalance. There's no one side delivery. And you've got sell side. There's an overlap. So you got to wait for both of those to get taken. There it is. Closes above it, comes back, gives a little tap right there. Look at that. Opens on it and then goes higher. Exactly the same thing. Exactly the same setup, man. Right there. Beautiful entry. You literally gapped up. So the next day, the next few hours or whatever it is, and where does it run for? My box-to-box setup I give you guys every morning. There's the box right there. Right there. Let's draw it out. Watch this, Nazir. Boom. Literally opened in that level. So you would have got perfect entry, perfect exit. It's algorithmic, man. I'm telling you. Your market's no different than anybody else's from an algorithmic perspective. No different. And if you don't buy that, then again, sorry, man, you're wasting your time here. But anyway, this is just super choppy. And we're in this non-farm payroll week. So it doesn't matter about how many hours a day your markets trade. When the algorithm kicks in, you'll see those giant gaps occur. Just keep the same objectives in play. If you understand, if you stick around long enough, you'll see it. I respect the work you do. I'm not trying to make you belittle you in any way, Nazir. I'm not trying to make you feel bad. I know it's hard for some guy over here in Canada to tell you that your markets are driven by the same algorithm that ours is and the Americans are, but it is. I know that's hard to believe, but I'll show you. You stick around every day, pop your name in there, and let me see your name in there, and I'll go over and I'll point out your Nifty 50. This is the same thing in stocks, bonds, commodities, minerals, oil. It doesn't matter what it is. Are you ready to go? Okay. All right. Hopefully that helps you, and hopefully you didn't take offense to what I was saying there, Nazir, because I'm not trying to offend you. Honestly, I understand some people are very fixed in their ways and how they think about the markets, and I'm not here to change your mind. Unless you stick around long enough, you'll change your own mind. All right, my buddy, heading out for some breakfast. Yeah, I'm heading out too. So thanks for tuning in, you guys. Nazir, much respect, my friend. Much respect. Pop in again tomorrow, and I'll show you again your Nifty 50. And we'll help you get a beat on it if you want, and help you understand it. You got to understand ICT concepts, so go study some ICT stuff. If you're not familiar with this, if you're using Heikin-Ashi, you're not looking at any ICT stuff. So look at the ICT principles and study those intently, and it's the best decision you'll ever make in your life, my friend. The best decision ever. Study his stuff, and don't go paying for it from somebody else. Don't pay for a mentorship. Go learn what he's got live in September. He's back in a couple of weeks. Watch his stuff, study his stuff. He's got tons of free stuff on the internet, on his channel. Go there. Do not pay some other bozo to teach you this stuff. Don't even expect me to teach it to you. I'll just have my principles that I use. It's the same kind of stuff that ICT has. But please don't go pay for it from somebody else. Study it yourself. It's all there. It's all free. And then you can join our community. We got lots of people willing to help you out if you've got the time and the patience to do it. You have some really awesome people in there that are willing to help you out. Until then, subscribe, hit the like button if you like what we're doing. And Nazir, I wish you all the best. If you don't turn up again, thank you for tuning in. I appreciate you popping by, and we'll see you guys bright and early tomorrow.